Our next guest says valuations are stretched. Momentum is showing some early signs of turning. Crossmark Global Investment CAO Bob Dahl joins us today. Bob, it's great to have you. I do wonder why you think the performance year to date hasn't created more of a chase environment, or are we just in sort of a lull of August right now?
Well, we've had an incredible chase environment. I would argue, Carl, the kind of the 4,200 to 4,600 move on the S&P happened just in a few weeks, and caused me to scratch my head. Bob Pisani covered it well. Valuations, they're extended. You got to have things going really well to justify these kind of valuations. I'm still concerned, Carl, about the lagged impact of what the Fed did over the last 15 months, the inverted yield curve, money growth, the leading economic indicators. So all this tells me some more sloppiness is probably in our future.
So just when some of these recession calls get pulled or pushed back, you think that's when the weakness starts to really demonstrate?
The high was almost the same day as a lot of people who had recession in the vocabulary said, sorry, only kidding. I still think we're on record since the beginning of the year. A recession, mild, starts between Labor Day and the end of the year. I'm still of that view for all the reasons I just stated.
So, Bob, what's going on with oil prices? 87.45 WTI crude. We're now at the highest point of the year, despite deflationary signals out of China. And you're worried about the U.S. economy. Isn't oil supposed to be going down in that kind of environment?
Well, you might think so. Of course, it had its decline earlier in the year, and now has turned around and come back up a quick 20%. Part of that, supply is just not abundant. You're absolutely right to question demand, but supply is the problem, as it's really hard to get a permit to drill somewhere here in the U.S., and that's been going on for quite some time.
So, Bob, what's the strategy to play the? I don't know. I don't want to brand it. What you're a soft landing, a mild recession. What are the sort of sectors and areas that work?
Yeah, so I'm still interested in the HMOs. They had a great year last year. Died the first half of this year, doing a little better here. They're pretty cheap stocks. I would own some of those. We talked about energy. You've got to own some energy stocks in this environment, I think. I've not given up on Visa and MasterCard. They're not cheap, but the fundamentals are quite good. Don't want to be totally out of technology. Software like Adobe, I think, makes sense. So there are names here and there that I think can be owned.
You still hearing clients say, you know what, the 2-year money markets is just too enticing at the moment until I get a clearer path to what earnings are going to do next year?
Thanks for bringing that up, Carl. Absolutely. A 5% handle for money short to out a period of time. Very enticing for people after they've made so much money in equities. Let me just go park some of that. It's hard to fight having some money in a 5% instrument over a several quarter environment. We're hearing that from our financial advisor clients very regularly.
Finally, if CPI does roll in soft, Bob, kind of like China and Manheim are suggesting it could, and it becomes clear that November might also be a skip for the Fed, does that give us any solace in terms of what earnings or what the markets may do going into Q4?
I think, Carl, that's the expectation. The disappointment would be if it goes the other direction. Look, inflation's come down, but core inflation, core PC, the Fed's favorite indicator, it's only come down about a point from its high. Now you have, as Sarah pointed out, oil prices and some other commodities moving up. I think that we have to worry about some of these labor discussions. Big increases being sought, and with labor so tight, that can carry to other places. So I'm not convinced inflation's going to 2 anytime soon.